Well, everybody. You have to laugh because if you don't laugh, you might cry. The latest jobs report, I think, was probably the most ridiculous and was the most manipulated jobs report the US BLS has ever put out. Right now, we have job openings being slashed. We have initial unemployment claims rising. And thirdly, we also have huge amounts of layoffs being announced. But the US government is trying to say that no, the unemployment rate has actually hit a new 50-year low of 3.4%. And all of a sudden, out of nowhere, like magic, there's been over 250,000 jobs created, far beating expectations, far beating all these economists' predictions, right when the banks were getting hit hard, right when the markets were selling off deep in the red, and people, things just don't make sense and things don't add up at all. So let's dive deep into this new jobs report, and I'm going to reveal to you a new trick that the BLS and also the government is trying to do to fool you, to tell you that everything's fine when really everything is not. So everyone, let's not waste any time. It's going to be a very important update. Let's get straight into the news, the facts, and the data. Well, everyone, look at this. US job growth beats expectations. Unemployment at half a century year low. So it's going to be very interesting to see how they're going to explain this, everyone. US employers boosted hiring in April while raising wages for workers, pointing to sustained labor market strength that could see the Federal Reserve keeping interest rates higher for some time. So why this is so-called good for the economy, this could possibly mean that interest rates will go higher and they'll stay higher for longer, because why should the Federal Reserve cut interest rates if the unemployment rate is actually at a 50-year low? But I don't think they're going to be able to keep this illusion up for much longer. So let's have a look at the cold hard numbers. So non-farm payrolls increased by 523,000 last month, and the Labor Department closely watched employment report showed on Friday data for March was revised lower. So this is their trick now, everyone, to 165,000 jobs and added instead of the 236 previously reported. So this is their new trick, everybody. Just put out a number that beats expectations to keep all the retail money, the dumb money happy, think that everything is fine, and then just very quietly and silently the next month revive them down. And these aren't, just maybe they'll offer 1% or 2% or 10%. They're doing revisions down like 30%. Not only that, economists polled by Reuters had forecast payrolls rising by 180,000, but payrolls were well above the 80,000 to 100 monthly increase needed to keep up with the growth in the working age population. So also, everybody, the unemployment rate has fallen to a new low of 3.4% from 3.5% in March. But another very important piece of information that the Federal Reserve is going to be worried about, because what they keep saying is they're worried about a wage price spiral. They don't want you to get a pay rise. They only want the CEOs to get a pay rise and the bankers to get fat bonuses. They don't worry when things like that are happening. But as soon as the middle class and the poor start getting ahead, they say, look, we need to clamp down on this wage price inflation. And you better not ask for a pay rise. Otherwise, you're part of the problem, not us printing trillions and trillions of dollars. So average hourly earnings gained 0.5% after advancing 0.3% in March. So this is an uptick here, everyone. Wages increased 4.4% on a year-over-year basis. But myself and now some economists are saying things don't add up. Some economists, however, believe that the labor market is overstating the health of the economy, pointing to the divergence between consumer spending and job gains, as well as continued decline in worker productivity. That's exactly right, everyone. We saw with one of the last jobs report, productivity fell 2.7% in just the first quarter of 2023. Also, we know the economy is not healthy at all. We know mass layoffs are being announced, and maybe they'll start to show up in the data next month if they actually report the real data. And also retail sales are falling as well. That dropped 1% in March. But look how bad productivity has gotten. So productivity has declined on a year-over-year basis for 5 straight quarters, the longest such stretch since the government started tracking the series since 1948. So this is absolutely crazy, run. This is the biggest drop in productivity on record. And also what they're not talking about is what kind of jobs are being created. Are they high-paid jobs? Are they good jobs with good benefits? No, a lot of the jobs are low paid, hospitality and leisure jobs. So even if, for example, we had zero unemployment, But if everyone was only making $15 an hour, I don't think the economy would be doing too good at all. And they're starting to say with risk of a recession mounting because of punitive borrowing costs and tighter credit conditions amid financial market stress, the hiring landscape could change quickly. And I think it is changing quickly, but they're not reporting the real numbers. But unfortunately, it's not just them faking economic data. They're about to get even more manipulative with the markets. They're about to start controlling the markets much, much more. These market conditions are about to get much more draconian. They're now thinking of doing the unthinkable. So that's right, everybody. They now want to start banning short selling as that comes under fire as regional bank shares sell off. So that's why we're seeing a big rebound in the bank stocks today. We're seeing a lot of shorts cover, but also there's some rumors that they may ban shorting bank stocks altogether during a financial crisis. And this is absolutely ridiculous. While I'm not short the banks myself personally, I think you should have the right to do that. If you do your research and you think it's a good option for you to short the banks while people profit off the gains, you should be able to profit off the mismanagement of these banks. And like everything in life, there needs to be a balance from bulls, from bears, to provide perspectives and to keep these markets from going to completely tulip mania bubble levels. And if this does go through, the US markets are going to lose a lot of credibility. So the practice of short selling is coming under increased scrutiny as shares of regional banks remain under pressure, with some calls for more regulatory oversight of the practice. Short sellers who borrow shares they expect to fall and hope to repay the loan for less, later to pocket the difference, have profited from the banking crisis. They gained $1.2 billion in the first 2 days of May, analyst firm Ortex said. And hey, I even know some of you, my subscribers in the comments, you've been shorting them, you've been buying puts on them, and I think you've made some good gains as well. So I don't think you'll be happy if they ban short selling altogether. So a law firm that represents large companies such as Twitter emerges and against attacks from hedge funds on Thursday called on US securities regulators to restrict short sales of financial institutions. In a letter sent to clients, Watchtower said that the Securities and Exchange Commission should regulate what it defines as coordinated short attacks by imposing a 15-day trading prohibition on short sales of financial institutions. So, of course, it's not the bank's mismanagement for the reason why these banks are going under. It's not them, buying these assets at overinflated prices and then losing a lot of money on them, and also them gambling away your savings. It's actually all the short sales fault, which, come on, everyone, that is just completely ridiculous. This would allow time for regulators to act and for investors to digest information, they said, adding that the attacks by short sales are not related to fundamental performance and put the US economy at greater risk. Well, I think it is a bit correlated with underperformance and fundamentals. These banks, they're not performing. They're going bankrupt. They're losing deposits. So I think it would be, a pretty safe bet to bet on these banks going out of business. And they said this will give more time for regulators and also investors to digest information, but I thought that's what we had trading halls for. And unfortunately, people, they've already tried this, but it didn't work out too well. So Watchtower's proposal would revive a ban implemented in 2008 during the financial crisis. Short selling was temporarily banned in the US, although a New York Federal Reserve review later showed the curve did not achieve the intended effect. Yeah, I don't think it worked out too well. The S&P crashed around 59% and a lot of banks went out of business. So again, this is all smoke and mirrors trying to say, look, the banks are fine, they're strong, nothing to see over here. It's all the short sellers' fault. So everyone, this is just more proof that the market is not a free market. It is 100% manipulated by the global elites, by the politicians, and you need to know how the game is played so you can get out on top. And I'm not going to be surprised at all if we get another report next month where they revise these job growth gains down massively. And time will only tell if they do ban short selling on bank stocks. But just like in 2008, it's not going to work. People are still going to sell the stock and send it to zero. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.